Okay, good morning, students. Today we're going to be going through business plans and cash flows with your lecture today. So throughout the lecture, I will be going through the module content. If for any reason you have a question, you're welcome to raise your hand and type it in the chat box. You also, I think for the ease of everybody in the class, rather type it in the chat box or raise your hand rather than unmuting yourself. Today's lecture is going to be recorded. There will be a repeat lecture this week, Thursday, and it will cover the exact same of today's lecture. So today's recording will be put up onto Learn once we completed with the lecture. So starting first and foremost, we're discussing what a business plan is. So a business plan is a formal document that a company utilizes to primarily contain what their goals are and how they're going to achieve these goals. So it's the method by which a company tries to understand what is the goals, the mission, the objective of the company. The business plan stipulates the time frame within which these goals need to be achieved. It also describes the nature of the business. What is the background of the business? It also explains what the organizational's financial projections are, the strategies of the business, the ways in which it's going to implement business plans in order to achieve these strategies. So in entirety, a business plan is a document that normally serves as a roadmap to provide the direction in which the company is going. So if you had to think of a company in existence, for example, a transport company, I'm just going to give you an example. If you had to think about startup of a transport company, initially the business owners would write up a formal document containing what their goals are for that business. So because transport is within the logistics department, they would then undertake research in order to find out what are the methods in which they're going to understand their goals, the time frames in order to achieve their financial goals, as well as their social responsibility. They're going to describe what the nature of the business is. So are they going to be operating nationally? Are they going to be operating internationally? What is the financial projection? Is the company going to be making a profit? Do they foresee that the company making a profit within the first 6 months? Or do they just foresee that the company is going to just break even within the first 6 months? So they're going to include into that, what are the strategies in order for them to facilitate in producing this business plan? So as I said to you, the business plan is almost like a default plan in which it serves the directors and the business owners to default back throughout the business process so that they can understand at the initial startup phase of the company, this is what we've actually said are the goals. This is how we're going to strategize. It's going to form as sort of a guidance tool throughout the business process. Now, you would probably trying to understand what's the purpose of the business plan if it's only going to serve for internal purposes. But a business plan is required by most financial institutions. So sticking with the transport company that we've spoken about, if for any reason that transport company required finance from a financing house or from a financial institution, they would then take this business plan and they would follow through and present it to the financial institution so that the financial institution can then look at this formal document, which has been mandated and which has been signed, to understand that this is a business that's being undertaken within the transport industry, and they can use it in order to finance that business. So that business plan that is initially drawn up by the business owners, remember, they would also contain the registration documents, the information about the directors, the information about the financials, etc. So that information will be used in order for them to obtain finance in order to start up their business. If for any reason those business owners do not have sufficient capital to undertake and to start up the business. So we want to understand what are the parts that are included in the business plan. Remember, all business plans have a cover sheet. They would include a table of contents. Now, most importantly, they've got an executive summary. Now, what is an executive summary? A summary is something that you would look at if you look at a set of financial statements. So if you go and you Google, for example, within the transport industry, we'll stick to the logistics company. So if you look at ABI, if you look at their published financial statements, you will always look at the commencement of the financial statements. They have an executive summary. The executive summary is telling you that the directors or the CFO or the highest management of the company is presenting what the business is about, what the goals have been within the business, what has happened during the year. Now, in this case, remember, we're starting up a company, so it could be that there hasn't yet been activities that have been undertaken. So this executive summary would then tell the audience that these are the goals and the objectives of which we wish to undertake. Then you move on to the organizational plan. So that is what is going to be the organization of the business. The marketing plan. The marketing plan, by its very nature, the name says that it's going to be, how is the company going to market itself? It's going to include the financial documents. So the financial documents here, you must remember, of great importance within financial documents, it's projections. So it will be the budget. It will be what is the existing capital that the company has. It could also be scenario planning documents. So sticking to the transport industry, say, for example, you undertake to take a contract up in the first 3 months from a public entity. So you've undertaken that you have signed up a contract within, say, a public entity, which is a government entity. You want to include that in your financial documents. So these could be tender documents. They could be projections for how you foresee to utilize the income. It could be expenditure planning. So here you could include anything that you foresee or that you budget that you will expend. Remember, you could expend items of a fixed term nature. You could expend items of a variable nature. When I say fixed term, I mean rent. You will incur that expense regardless of whether you're undertaking a business. A variable nature could be the drivers for the trucking company, for the transport company. Remember, you would only pay the drivers if they are utilizing or if they are employed within that logistics that you are undertaking. Part 4 of the business plan would include any other supporting documentation. So say, for example, you've got the support of the DTI. So for those of you who don't know what the DTI is, it's an industry that is supportive. So it's the Department of Trade and Industry. So here you've gone and you've went above the board and you've done some serious planning with regards to your business plan. So you've got the support of the DTI, who says that should you get to a profit level of a certain amount, we will then sponsor you with a donation towards your company in order that you employ good social practice. So sticking to the transport industry, now you know that the transport industry is undertaking trucking. Trucking, for example, utilizes a lot of diesel or petrol. There's fumes that's being emitted. So say, for example, you put through on your business plan that should you get to a profit in the next 6 months to 12 months, you will then utilize that profit, say, for example, to install more engineered sort of parts into the trucks or into your logistics company so that there's less carbon emission. So that type of information you will utilize and you'll include it into your supporting documentation. Why? Because remember, your business plan is the foundation of what you're going to be utilizing towards getting finance, towards promoting your business, and towards setting as a guideline. So it's almost like a blueprint foundation of your business. So let's start off with the organizational plan. The organizational plan starts off with what is the description of the business? So what is the type of industry are you in? Is it a service industry? Are you going to be providing a service? Or is it going to be goods? Are you going to be selling goods? You're also going to include administrative planning in there. So what is administrative planning? It's your location. So where is your head office going to be held? Where is your subsidiary companies going to be held? Are you going to have depots in different locations? Are you going to be nationally? Geographically, where are you going to be located? What is the legal structure of your business? Are you going to be a sole trader? Are you yourself going to undertake this? Are you going into a partnership? Or are you entering into a merger into another company that's already existing? So what is going to be the management and personnel? So what is going to be your staff profile? Who is going to be your manager? So here you're going to outline what is the staff diagrammatic flow. In other words, who are your directors starting from the top? Who are your directors? You will then want to bring that level down into who is the hierarchy of the technical directors, your operational directors, who is your finance staff, and you will bring that down right to the bottom as to whichever person is involved into the business. So remember, all this information that you're putting into the organizational plan is going to feed into the financial plan. So you must remember, if you're including information on the location itself, if, for example, you're paying rent at a certain location and you're paying rent for your premises that you're holding for your head office, and you're paying rent for one of the depots that you're renting, sticking with the transport company, you obviously want to include all this information in the organizational plan. Why? Because it's going to feed into the financial plan, because for everything that you're accounting for in the administrative plan, you're going to be incurring an expense. And that goes accordingly with accounting and legal services that you're going to be administrating. So who's going to be doing the accounting work? Are you employing someone in-house, or are you subcontracting your accounting work to an accounting firm who is then going to undertake the financial services of your business? You're going to include information on insurance. You're going to include information on security and intellectual property. Now, you would probably want to question why you're going to include information such as insurance and security. Remember, when you take a business plan to a financial institution, and if you understand what has happened in the past 2 years, globally, nationally, internationally, with COVID, with unrest, etc., you would want to know that if you're going to be investing in a company, it's sufficiently insured. So that means that should there be a lack of business continuity, so should there be, for example, any stop in the production of whatever service you're rendering, or a stop in the production of any goods that you're producing, you want to know that an insurance company is going to insure you for that amount of lost production. Security, why is security important? Because if you do not have enough security, there's a risk of loss. Intellectual property. What is intellectual property? Intellectual property is patents. It's goodwill. So say, for example, you have taken a batch of trucks that you have bought separately. So now you've got a batch of trucks that you have bought from a producer, from a trucking company, say Mercedes, etc. Now, what you have in mind is that you want to subcontract for ABI, which is Coca-Cola. So what you're going to be doing is you're going to go into a contract with ABI, and you're going to ask them if you can use their logo on your trucking company. So remember, you've got these set of trucks which you've bought separately, and they're external to ABI. However, you're going into a subcontracting with ABI, and you are using their logo on your trucks. So in other words, that is intellectual property. That is goodwill. You are using another company's patent, another company's name. And that's information that you want to include in your business plan, because it's going to carry weight and it's going to add value to the business plan. Now we move on to the marketing plan. So what is the marketing plan? If you had to look at the name itself, initially and immediately, what would come to mind is how you're going to be marketing your product. Immediately, you want to understand the type of the business. So remember, we filtering from the organizational plan. We coming into what is the marketing plan. So that information is going to filter. What is your target market? So who are you targeting with your business? So who's the audience that you're targeting? Say you're producing goods. Say, for example, you're in the sugar industry and you are producing goods for the people who consume any sugar-related products. Your target market is going to be soft drinks. Your target market is going to be confectionery. It's going to be restaurants. It's going to be shopping centers or shopping shops, for example. Who is going to be your competitors? So you're in the sugar industry, and say, for example, you a fairly small company that's entering into the market. Who is going to be your competitor? A competitor is going to be an established producer within that certain type of similar industry in which you're working in. And why do you want to know who your competitor is? So why would you want to know who your competitor is? Can anybody tell me why you would want to know who your competitor is? What information, what important information would you gain from there? Can unmute?
I think information about how do they attract the target markets and how do they market their products or service that they offer into the public.
Yes, correct. But think a little bit broader. Just think a little bit broader. Think about manipulating your competitor. Yes, you'll get information on their target market. You're going to get information on their pricing, their packaging, and everything. Isn't that information going to be useful to you? And then you're going to take that information, you're going to manipulate it, and then you're going to say, okay, fine, I'm in the sugar industry, and one of the biggest competitors is Tongaat Hewlett, and they are targeting more of the higher end producers or consumers. So why don't I use that information from Tongaat Hewlett, and why don't I now target the lower end market? Why don't I reduce the packaging? So Tongaat Hewlett is making 25 kg bags of sugar. Why don't I reduce that to, say, 4 5 kg bags? So do you understand how you get information? The other thing is on the example that I've given you. I've used the example of Tongaat Hewlett. Can anybody tell me why it's important for you to understand what's happening in the market? Throughout your ACC 103 course, you need to understand that you need an understanding of real life financial trends. You need to understand what's happening in the real world. Now, if you take, for example, the current pandemic that we're in, it's totally disarrayed the entire marketing strategy that a normal company would have had prior to 2020, early 2020. Am I correct? So remember, if you're doing a marketing plan in COVID-19 and you're doing it for the rest of the pandemic, are you going to utilize information prior to the pandemic? Are you going to say that I'm now producing in the sugar industry, I'm using Tongaat Hewlett, so I'm using Tongaat Hewlett's marketing strategy for 2018? Is that what you're going to be doing? Can somebody just tell me, give me your thoughts? How are you going to manipulate this information? And can you give me some of your thoughts that you might have on a business plan in the current times? Now I'm trying to make you think a little bit out of the box. Just give me your thoughts. You're welcome to unmute yourself, raise your hand. Yes, go for it. Somebody's unmuted. Go for it.
Can you hear me?
Yes, I can.
Within the current day, you take into consideration the fact that the pandemic has affected marketing. So marketing will not be the same, you know, and logistics as well. And access to products will no longer be the same. So you'll utilize things like delivery and
Okay, sticking to that. What have we moved from? We've moved from contact buying to
online buying.
Yes. Thank you. Excellent. Now remember, when you're doing a business plan, yes, I'm talking to you about a business plan in general. But when you're understanding it in the context of a business, you understand it in the context of industry trends, of current day and age. Do you now understand why so many businesses are in distress in the current times? Why? Because they've not included in their business plan mitigating strategies. If I had to move from my shop being closed during lockdown 5, what am I going to do? How am I going to get it to the consumer? How am I going to filter this information to my financial planning? Do you understand why it's so important for you to understand market analysis? Now, when I said you need to read what's going on in the current day and age, you need to know that at least 43% of companies have filed for business rescue and business distress from the beginning of COVID-19 in South Africa alone. Why? Because they've been unable to trade during these conditions. Now, someone tell me which was the hardest hit industry. In lockdown 5, what was permitted to be trading only and what was not permitted? Now, you're going to get this on a test basis. Remember, you're not going to get a company that's just standard. You're going to get information. You're going to now need to know how to interpret this information. Someone tell me quickly, what was the hardest hit industry? Where were we not allowed to go?
I think it's restaurants and entertainment industry, like events.
Yes, thank you. It was leisure. It was tourism. It was hotel industries. I'm sure every single one of you has stayed in a Protea hotel or somewhere seen a Protea hotel. Do you know that most of the Protea hotels have closed down? So remember, include this information in your marketing plan. Now we move on to the financial documents. You want to understand what's the sources and the uses of your finances. You're going to include your financial statements. You're going to include what's key here. Now, on our discussion here, point number 3. Why is point number 3 almost information that is, I won't say it's irrelevant. Remember, it's historical financial information. But what is key about point number 3? How are we going to use point number 3 and move forward with it in our business plan? So remember, you're the business owner. You're the business owner of this logistics company. You've got prior financial statements of a similar company. But now, are you going to be able to use that information? Yes? No? Maybe?
I think you could be able to use it in the sense that you could look at whatever financial mistakes that the other company made and try to improve yourself based off what they did wrong.
Yes, exactly. Excellent. Now, I mentioned earlier a specific type of financials that you can include. It was called scenario planning, and it was called sensitivity analysis. You can use that historical information, and you can then say, okay, I'm going to do a scenario plan here. What if, for example, I'm not able to use a certain depot? What if, for example, demand reduces by 50%? So that's what you're going to use the historical financials for. Remember, understanding the components of a business plan, even if you utilize it just in your Acc103 context, you're going to understand this information even when you go out in practice. So each one of you is going to take information out of your course and you're going to use it in a boardroom decision. You're going to use it as a business owner, or you're going to be using and understanding all of this information somewhere in your life in a real life context. So whatever I'm speaking to you here, don't think of it in the box. Understand that you're going to take the information in here, and at some point in the time of your career, you're going to be using this information. You're also going to do financial statement analysis. Now, what is financial statement analysis? If you're given an income statement and a balance sheet, and say, for example, you're sitting in a boardroom with a financial planner. So you're sitting with the bank and this key financial institution. He's now sitting there with you. He's the business, he's the bank owner, but he doesn't understand financial analysis. And now you're the business owner and you have this global knowledge that you've undertaken in your course, and you are presenting these financial documents in your business plan. What information are you going to give him? He understands very little about your business. He doesn't understand much of financial analysis. So if you had to say, let's look at the income statement. The income statement gives you the sales, it gives you the expenses, it gives you the profit. Now you're going to have an income statement, for example, in your plan. You're going to have it for month 1, month 2, right up until month 12. So for example, if you're sitting and you're trying to debate and you're trying to sell your business plan, you can very well tell the bank manager, month 6, my profit is actually 50% more than in month 1. So that is where financial statement analysis, the word analysis is very important, because this is what's going to allow you to view whether you're going on the route of where you are inclining and the growth of your business is increasing, or whether you're going in high rises of your business and then you're going to low dips and then you're going to a deep trough of where your business is declining. So that analysis is very important. The other important aspect is obviously, what are your needs for the business? Here I've spoken to you about your needs for the finances. It either could come in internally, it either could be external. Internal means that as business owners, they bring in the finances, so they personally invest in it. Externally, you could get it from a financial institution, you could get it from an investor. Remember, there are different types of investors out there. There's investors who want to be involved in your business. There's investors that don't want to be involved in your business. Now, you know that a few years ago, the big company MTN, didn't they start selling out shares to the public? And it was at a really reduced amount. Who can remember that MTN was selling shares out to the public? And at that time, they were looking at going out into countries that don't have good cellular coverage. So they were looking at going into the very underprivileged countries. So they started selling shares to the public. So they started selling shares to individuals. So you had a right to buy the share, but you didn't have a right to make any decisions in the company. But what was the benefit for MTN? Now just think, for example, if you, for example, or me, here we go out and we buy these MTN shares. What's the benefit for MTN?
MTN will be able to capitalize their equity or capital.
Excellent, 100%. Now you know you're on point, you're following through. So you understand the needs of the financials. Does not necessarily need to be where you have a controlling interest in the company or whether you don't have a controlling interest. You could also have angel investors. Now, the reason why they call it angel is because it's angelic. It means that you have an investor that just comes in there and provides you with that money, primarily because they want to almost donate the money for the needs and cause of the business. Why? Because your logistics company is now taking groceries, it's taking goods, all out to the underprivileged community. And wow, what has happened? You're meeting the societal needs of your country, and the DTI has therefore been very angelic, and they've given you an angel investing. Remember, the financial documents have to stipulate how much money you need at every single point of your business projection. Does everybody follow on that? What I mean is that if, for example, in month 3, you still decide to only sell 100 products, then that means at month 3, month 1 to month 3 will be the same. Say, for example, in month 4, your projection says that you now wish to go out almost into the target audience of what you haven't yet done. It means that you're now increasing your sales to 200 units. Accordingly, your expenditure has to mirror that. It means that you're going to be incurring more production costs for that extra 100 units. Now, the sources of the funding, I've told you where they can come from. They can come from internally or they can come from externally. And remember, you could also have investors that are really intelligent in the sense that they want to utilize your business for them to make a profit. That means that you have an investor that's willing to invest in your company, but he wants to charge you interest. That then becomes what to you? So if you had to look at your balance sheet, you've got the assets, and the other part is called the liabilities. Within the liabilities, it means that you now have to pay interest to the company. It means it becomes a debt. So you have to account for every single source of income that comes in and every single source of income that comes out, both on your income statement and your balance sheet. You also need to remember that when you're doing your business plan, you want to ensure that you capitalize, as a student said earlier. Capitalizing means that you're optimizing, you're making the best possible use. So if you have an investor, and say, for example, you're in a very niche market. Now, who understands the word niche? Niche is N-I-C-H-E. It means you have a very unique product. So say, for example, you are now in the pottery industry. So you're making different vases and you're making different ornaments made out of cement and stone, etc. That is a very niche market. There are customers that don't necessarily find it an essential product. So your target market is going to be very small. In other words, you've got a company now that you want to start up, but you obviously don't have the finances for it. You've got a lending institution that is willing to fund you, but that lending institution wants to charge you interest. So how will you mitigate if you're in a company where you're making very slow progress on your profits, but you've got this company that's willing to lend you, but it's on an interest-based lending? So if you had to think about it, how would you mitigate? Now, mitigate is how would you counteract that you don't get to a point where you're actually making a really huge loss. So So this lending industry, remember this finance institution, it could be an individual, it could be a finance institution. They now want to charge you interest. What are some of the things that you can then negotiate with this financing institution? Just think about it. What is the interest based on? It's based on the rate, isn't it? So wouldn't you want to negotiate with the financier that they give you a fixed rate? What about if you tell the financier that, look, my pottery industry right now isn't making really much profit, but as soon as my sales go up to a certain level, say 20% of my input, you can then increase that interest rate. Do you see how you can mitigate and how you can counteract and understand what needs to go in a business plan? So when you're projecting for the future, you have a cash flow statement. A cash flow statement is basically a understanding of where your cash is going. Is it going in my investing activities? Is it going into the assets that I'm buying? Is it going into my debt? So is it in interest-bearing information? You could have an income projection for 2 years, for 1 year, 3 years. Remember, I spoke to you about a budget analysis. Now, why would you want a budget analysis quarterly? Me, if I was in a company where I've started up a really small, I would want a budget analysis monthly because I want to track my expenditure. I want to understand where I'm going wrong if I am going wrong. Then I want to understand, am I breaking even? Break even means that you're neither making a profit, neither are you making a loss. So remember, these are very important aspects that you want to include in your business plan. Why? Because the intention of a company is to make a profit. So you want to track, you want to use it. If you've got historical information, as we said in the prior slides, you can use it as a post-mortem. Okay, what has happened? Where have I gone wrong? The financial statements, remember I spoke to you earlier on financial statement analysis. Now remember I gave you the depiction of you sitting with the bank manager and he doesn't understand anything in your business. Remember, he's working with 200 to 300 different types of industries and he doesn't understand what is actually the liquidity of your company. So you've now got to understand, if you want to sell your business plan, you need to break this down into how you present this information. So liquidity, remember liquid, it comes from the word liquid. It's easily flowing. It's bank. It's the availability of liquid assets. Normally it's cash, it's debtors, it's stock. It's information that's on your balance sheet where it's immediately available. What's immediately available? Something within the next 30 days, something within the next 6 months, but not something within the next 6 years. Do you follow? Profitability analysis. You want to show the bank manager, or for example, you want to show any investor, what is my profitability analysis for the next coming years, or say for the next 6 months? So I will show him my profit as a percentage of my sales. I'll show him a profit as a percentage of my expenditure. Then you want to show him, okay, what is the measure of my debt? I have now gone into financing my business from an investor who's charging me interest on a fixed rate for 6 months. And then after 6 months, it's going to change, or it might increase or reduce. What is my investment? So how much of investment have I got in my business? A vertical financial analysis compared to a horizontal. Now, what does that mean? Vertical versus a horizontal. Who can tell me what they understand of those two terms? So the key difference between horizontal and vertical analysis is the procedure in the financial analysis. So it's over a certain period of time as compared to line by line. So remember the difference between the vertical. So the key difference between the horizontal and the vertical is that the horizontal analysis is a procedure in the financial analysis in which the amounts in the financial statements are over a certain period of time. And it's compared line by line in order to make decisions. The vertical analysis is where each line is listed as a percentage. Now you can go into your textbook and understand this, or you can actually look it up. But in simple terms, all it's saying is if your financial statements are, if you look at a company that's published financials, remember they're giving you year by year by year. So if you want to understand a vertical, what would you understand? Which way is it going? So remember, vertical is going down. So if, for example, on your income statement, you want to understand the expenditure for, say, for example, the amount of rent, as opposed to, what is rent related to? The square meterage of your business, isn't it? So it's going to be, if I try and explain it to you, it's going to be very technical, but I want you to just go and understand the simplicity of it. The vertical analysis is line by line. Horizontal is over a period of time. The supporting, okay, sorry, I've got a question in the chat. Yes, exactly. So whoever is SM, you've got it right. He says the vertical analysis is the proportional analysis of financial statements where it's line by line. And the vertical is also useful because it's across a certain period of time and it's on a comparative analysis. Your supporting documents, as I said to you, they're going to include the CVs of the directors, the main people. It's going to be the owner's financial statements. So if the director is going to be investing in the company in his personal interest, it's going to be his information and his financial statements. Remember, sometimes directors are not just directors solely of one company. So they would include information of any other companies that they're personally responsible for. Why? Because if you are in partnership with somebody and they are a director of another company in which they're personally liable, if that company, for example, has to be jeopardized in any way, it means that your company is going to be jeopardized because this financial director will not specifically have that finances to invest in your company. You're going to include any credit reports from your suppliers. So say, for example, you have continuing using a supplier from another business that you've got, or you've got a huge supplier that's been supplying both nationally and internationally. You will know that suppliers have credit reports, they've got credit ratings where they are measured on the service that they lend and their payments and their income, etc. You want any reference letters from your either on a personal capacity from the directors or from a professional capacity within the business. You want a location analysis, as I said to you, if you were in either a logistics type of a company. You want this information is imperative because from somebody who wants to invest in your company, they want to understand where you're located, your head office, where is your trucking depots, and where's your customer base. So obviously the distance is going to be very important because the larger distance is going to mean that you're going to need higher expenditure. The lesser distance is going to mean that you're capitalizing and you're using, you're based much more closer to the places in which you are supplying. Legal documents, this is the registration documents of the business, any leases, any contracts, any agreements. Remember I said to you, if you do have, or in your business, if you have a foresee that you're going to get into a contract with, for example, a public entity, then you want to include this information, any agreements. So say, for example, you've got an agreement between directors that as soon as the company hits a profit percentage of 20%, they're now going to take out drawings from the company. They're going to utilize it in their personal capacity. They're going to give each other a performance bonus. So that type of agreements you want to include, and any demographic studies. That is the end of today's lecture. Is there any questions on businesses? Remember, when we speak of the business and the cash flows of the entity, okay, sorry, I actually want to go into the cash component. So I think let's quickly go on to that. Okay, Akona, you can speak. What is your question?
Good morning, ma'am. Which chapter is this on the textbook?
Okay, this is not in the textbook. Unfortunately, we've had to include this separately externally because your textbook doesn't cover it. However, the slides are uploaded onto Learn, and this lecture will be uploaded.
Okay, ma'am, thank you.
Okay, if we look at what is the cash that you're going to be using, remember I said to you, cash is inclusive of anything in your bank account, it's investment, it's either foreign currency or whatever you have in your business at the moment. So that is what is in your bank account. Your cash flows, if you look at a cash flow statement, they're going to come from what are your operations, that's your sales, your investments, and your financing. So these three components are actually telling you your operating. So where's your operations? What is coming from your investing activities? So the investments that you've undertaken, and the financing activities is where you... Okay, sorry students, I got kicked off Zoom there for a second. My apologies. Going to start resharing the screen. So we were on cash flows. So as I said to you, it's including the operating, investing, and financing activities. So the operating activities, as I've said to you, they are including the sale of your goods. Investment activities is relating to anything that you're going to be acquiring, and the financing activities, which is any long-term or short-term activities or debts. So here is a depiction of a cash flow flow chart. It's showing you the suppliers of any of your materials that you've purchased. It's showing you, so if you look at the middle of your screen, you can see that cash is either going to suppliers, it's either going to the government in the payment of taxes, it's going to creditors, or it is going to stockholders, which is people who own the business in the form of dividends. So if we look at cash flows from operating activities, so this is information that is primarily from the income statement, and it's cash received from your customers, the cash that's paid to suppliers, and the cash payments to any other expenses as well as any taxes. If we look at the investment activities, so surely you're going to be buying property, plant, and equipment. This is going to be investment activities. So this will form part of any of the investments, either they're tangible, means that you can actually observe it, or intangible in the sense of goodwill, and any loans extended to other companies. So when we move on to the financing activities, this is information of how you're financing your business. So this could be from loans or the issue of bonds. It could be from any borrowings or any cash payments as dividends. If you look at the uses of this information, it's to access the ability of the information. So what is the cash flow used for? It's to assess whether the business is making any money. It's to understand whether they're generating cash. What's the ability of the company from those three different components, which is the investing, the financing, and the operating capacity. So this information provides a lot of effective strategy on how the company is converting its revenues into cash. Alongside with the cash budget, remember we spoke about how you're going to assess liquidity and how you're going to also assess your dividend policy. So remember, if you're not making much cash, you're not going to pay a lot of dividends. And it's also used to evaluate the investment and financing decisions. So you can go through this and understand the operating activities, where they come from, the investing and the financing. I've just put it in a flowchart type of format, but it's exactly the same as I've explained earlier. So now you've got the format of the cash flow statement. You've got the cash flows from operating and investing and financing. That gives you the difference. And then you're going to add your cash balance at the beginning of the year. You're going to plus minus whatever you're operating, investing, and financing, and you're going to subtract the end balance. So this is going to give you the net cash flow from both your operating, investing, and financing. Now remember, the cash flows, you can either have a direct method in which the income statement items are converted to cash flows, or you have an indirect method. So basically, the direct method means that anything that is actually happening. So this means it's actually, you've been invoiced, you've paid for it. The indirect method means that it's on an accrual basis. So it's the indirect method means that, say, for example, you contracted for the next 6 months. Yes, you haven't paid it yet, but you're still going to incur that cost for rent for the next 6 months. So the indirect method will take into that cost for the next 6 months, even though you haven't paid it yet. So that's just the main difference between the direct and the indirect method. And that's the end of today's lecture. My apologies for the drop in connection. If you have any questions, you're welcome to ask me now. There will be a repeat lecture on Thursday, and the recording of today's lecture will be uploaded onto Learn. If there's no questions, you're welcome to leave the session, but I will stay online for the next 5 minutes if you have any questions.
Sorry, ma'am.
Yes, go for it.
You know how PMB's tutorials are on Mondays?
Yes.
Is it going to be based off of the work of the previous week?
Yes. Are you on your tutorial chat with your tutor on WhatsApp?
Yes. Okay, no, I'm not on there.
Oh, you're not? I think try and check with your administrator.
Because I'm attending the Westville lectures, but I'm actually registered at PMB.
That's fine. So, there's actually just one set of lectures each week. So I know it seems a bit confusing on the Learn, but if you go to the Learn, you'll see the times there. So for those students who are confused, there's going to be lectures on a Monday at 10:30 and a repeat on a Thursday at 8:40. The Wednesday and the Friday lecture is not going to happen in Westville because we've combined the lectures. So today's lecture is for both PMB and for Westville. So Fatima, I think you asked the question as well. There's no lecture tomorrow. The repeat lecture is on Thursday at 8:40.
Okay. Thank you, ma'am.
So Gisela, there's no lecture tomorrow. There's only a lecture on a Monday at 10:30. I'm going to share the screen, okay? So I'm taking you right to the Zoom, to the Learn. So you see on your announcements page, there's the lecture there. You see this is to be confirmed. To be confirmed. So there's no lecture on a Wednesday and a Friday. There's a lecture only on a Monday at 10:30 and on a Thursday at 8:40.
Okay. So in today's TAT for PMB, we won't be covering the work that we did today.
No, it's always for the prior weeks. Yes.
Okay.
Yeah.
Thank you.
No, they don't expect you to know your work for this week already. You have a week still to go for this week's tutorial. It will be covered next week.
Thank you very much, ma'am.
No problem. Akona, you had a question. Okay, I'm going to stop the recording, but you can still...